Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets are at the day's high this Tuesday afternoon. The Nifty heads towards the 12,000 mark. Banking stocks are outperforming the index. Sterlite Technologies has gained the most in almost a month after promoter company relieved its entire 52% pledged holding from the lenders. Indiabulls Housing Finance is the top loser on Nifty today. The company has refuted allegations of its siphoning of 98,000 crore rupees, terming it bizarre. And Sun Pharma too is among the top Nifty losers after Goldman Sachs downgraded the stock to sell and also cut its price target. Good afternoon, Agam. Well, the Nifty is inching towards the 12,000 mark, and for majority of the session, actually, we've traded in the positive territory, at least for Nifty. Absolutely,
Navneet. Unfortunately, we haven't been able to see the Nifty move and breach above that mark of 12,000. However, gains certainly there, as you can see. In fact, trading near a day's highs is the same for the Sensex. So we certainly are seeing an advance coming through. Now, if you consider the way things are panning out for the broader markets, which may include the mid-cap and the small-cap indices, the mid-cap indices are moving largely in tandem with the benchmarks, but that's not the case for the small caps. But moving on, as far as your advance decline ratio is concerned, we do certainly have more declines in comparison to advances as far as the National Stock Exchange goes. But moving on to your perhaps big movers as far as the Nifty is concerned, if we can have the heat map on, you get a better idea of stocks. So when it comes to the advanced decline ratio on the Nifty, it's it's going against what we've seen on the National Stock Exchange. So in the losers, key losers, Sun Pharma down 2.5% on account of a downgrade coming through, and Indiabulls Housing Finance, pardon me, we have some concerns there with respect to the management. On the gaining end, Yes Bank is right at the top of the gaining list, up as much as 4.5%, followed by Z Entertainment, ONGC and Vedanta. Let's not forget, Z Entertainment promoters have sold about 1.5% stake of their pledged quantity. But let's move in and talk about turnovers too, because turnovers is something that we should mark and see whether or not there will be a very big change towards the end of the session. And that's the reason why turnovers, of course, currently standing at around 6.3 lakh crores totally for BSE, NSE, cash and F&O. We're not seeing too much of movement there, but we'll see whether or not this aspect changes significantly. But let's talk about the mid caps and the small caps too, the broader markets perhaps, and see where you do have gains coming. So Sterlite Technologies, of course, on expected lines after the shares have been been taken off the pledges. Dish TV India, Cholamandalam Finance and Canara Bank all advancing. On the losing end, we have Ajanta Pharma down 3%, Dilip Bilcon, Indiabulls Ventures and Jubilant Foodworks also declining. But there are perhaps a handful of names which are actually doing very well in today's day of trade, and that will include the likes of Sterlite Technologies. So on the whole, we're watching out for some of these names, individual names doing very well. The benchmarks, a relatively stable day of trade today. But I reckon, Navneet, the same could be said when it comes to the futures and options space.
That's right, Agam. In fact, as we speak, Nifty is very close to its day's high mark. And I think the positive takeaway from today's session is yesterday we had a gap up opening, then there was selling seen at higher levels, but that's not been the case today. We definitely slipped into the red in the first hour of trade, but from thereabouts, we maintained our gains. So Nifty right now about 11,982, and we've also seen some bit of build up with regard to open interest. And intraday, the premium has gone up. I remember at one point of time, futures were just trading with a premium of about 2 to 3 points. Currently, the premium on Nifty futures is at about 21 points. And similar is the case for Bank Nifty, which has gone up. It's outperforming. It's up 1%, but the futures are trading at a discount of about 9 to 10 points. In terms of open interest build up till now, it's about 7% higher for the Bank Nifty June futures. The volatility index has cooled off after the markets have scaled higher. So India VIX is now 14.4, down almost 3.5%. Interesting options data. In fact, the maximum open interest so far we were reporting was at about 11,800 put, but now there is aggressive put writing which is coming at 11,900 in today's session, and the maximum open interest on the put side has now shifted from 11,800 to about 11,900. What is that telling you? The range for Nifty Nifty is moving higher, and that is clearly visible. 15 lakh shares being added for 11,900 put, whereas on the call side, as the markets are moving toward the 12,000 mark, the call writers are running for cover as the 11,900 call strike has now seen unwinding of about closer to 1.5 lakh shares, whereas just a bit of, I guess, 2 to 2.5 lakh shares have been added when it comes to the 11,950 strike. And not only that, even the strike, which is sitting with maximum open interest on the call side, that's 12,000, that too is witnessing some bit of unwinding in today's session. In terms of stock futures, HCL Technologies is the one which is perked up in today's trade. The stock is trading above its 50 DMA for the week, and there is some cash-based buying seen here, because if you check the volumes on the cash side, they've been higher. The white line on your screen indicates the average, the volume, projected volumes for today vis-a-vis the average volume of last 20 days, which is being projected on the blue line. So which is telling you there is some buying which is coming on the cash side. I was just checking the delivery data also, which appears to be on the higher side, reported by NSE at least till 1 p.m. And in terms of futures, no major build-up, but still open interest is up about 4%. Repco Home is the other one where a lot of OI build-up has been seen. Actually, that's the observation, though the stock has been trading below all its key moving averages. Some shorting definitely seen. Pull up the futures plate. That's going to give you 25% higher, by the way, when it comes to the OI build-up, and the stock's down almost 2%. Traders betting on the short side for Repco Home. Ujjivan is the other one. The stock's down for the second straight day. There are short positions seen in this one. In fact, if you look at this counter, it's been trading very close to its 50-day moving average, at least for this week. And the futures are indicating 18% higher OI build-up, 3% lower for the stock. I think it's also sitting at day's low, indicating some fresh shorting seen. So net, Agam, I think we're approaching the 12,000 mark. I think the key important point will be whether we cross and we can close above the 12,000 mark, because before this, I think Nifty is closed above 12,000 only twice.
That's correct, and we're going to watch out for that mark for now. But on that note, speaking of the markets, let's get in a market voice. We have Sanjeev Zarbade of Kotak Securities who's joining us on the show right now. Sanjeev, good afternoon and thanks for taking the time out. Let me start by asking you about how you're viewing perhaps the benchmark indices and the constituents here. What is your view from here on, and where do you expect the benchmarks to go?
Thanks for having me on the show. If you look at the Indian markets, we started the calendar year, we were in fact underperforming for the first 2 months, and then there was a catch-up rally from our side, so we kind of caught up with the global markets. And then there was a big event in May, wherein the results were largely lapped up by the markets, and we have the prospect of a good economy and a stable government. So the Indian markets have outperformed in May significantly as against the global markets, which were down between 4 to 5%. So going ahead, I believe that the key events to watch out for would be the way the monsoons pan out, because the economic indicators are not looking good. In addition to that, then there are global events like the G20 meeting, where there could be some talk about supply cuts on the crude side, and also the Fed Reserve meeting. And finally, in the first week of July, we will have the union budget. So these are a couple of events that are lined up. My sense is that in the near term, the markets are likely to be significantly range bound, because the valuations for Nifty is trading at almost 19.3 times 1 year forward earnings. And that leaves very limited room for valuations or the Nifty to go up from here. But over a medium term, in a 6 to 9 months time frame, we are looking at Nifty level of around 12,750 odd.
Okay, 12,750 is the target on Nifty, and by the way, Nifty is approaching the 12,000 mark. Sanjeev, let's get down to your individual stock ideas then, and on top is Amber Enterprises, where you guys have a buy rating with the target price of 976. Now, the cooling industry, if you look at the numbers in the fourth quarter, did not do that well, and reasons were plenty: erratic weather condition, delayed summer, rupee depreciation, and I guess also the raw material prices for this one had gone higher, which has impacted the earnings overall and impacting the operating performance as well. But now suddenly we've seen recovery coming in for a lot of these stocks. some of the reports are indicating the scorching summer that we are facing could also boost the earnings. So what's your rationale behind giving a buy rating on Amber's, though this one, the numbers in the fourth quarter were better than what were reported by its peers?
Yes, so if you look at the room air conditioning industry, FY19 were a very difficult year for the industry because in the first quarter, which is the seasonally strongest quarter, there were unseasonal rains, and even the night temperatures were much lower, and that really impacted the industry, and the industry was saddled with excess inventory by the end of the first quarter, and that inventory took almost 2.5 quarters to completely liquidate. In the process, what happened was that the industry could not take price hikes, even as the commodity cost pressures continued to go up. Also, there was forex volatility in the month of October. All these factors actually hurt the industry, and as a result, we saw that the stock prices of major AC manufacturers as well as Amber underperformed in FY19. Now, going ahead, what we have seen in the month of April was that the offtake of room air conditioners from Amber has actually gone up by almost 50%. That's what the management has indicated. And in the first quarter, that is the current quarter, we are expecting on almost 25 to 30% growth in revenue. Also, the reports that we are getting so far as the weather conditions are concerned, if you see in northern region, which is the largest market for room air conditioners, the temperature in Delhi touched almost 48 degrees, and it was almost 50 degrees in other parts of Rajasthan. So the weather is favorable, and we have a low base of previous fiscal. So I think in the coming 2 to 3 quarters, the earnings growth should be quite strong. And Amber is the market leader so far as the contract manufacturing of room air conditioning is concerned. So if the industry grows, naturally there will be more business for Amber, and that's how we are bullish on the company.
Right, Sanjeev, there were some concerns with respect to GAIL, and we've seen a little bit of correction of late because of PNGRB, and the price hikes that were taken were not up to expectations. But you're not concerned about that. You're not too perturbed. Can you take us through your view on GAIL as well?
Yes, sure. So GAIL is the primary gas transmission company. It's a PSU. Now, there were expectations in the stock that the PNGRB would allow much higher transmission tariffs to the company. In fact, GAIL had sought almost 97 per MMBTU as tariff for the integrated gas pipeline. As against that, the actual tariff allowed by PNGRB was 41 MMBTU per unit. So that came as a significant disappointment. We were actually expecting much higher increase in tariffs, but the actual tariff was marginally higher than the current one. So we had to actually reduce our earnings estimates. Having said that, this disappointment has already been priced in. Stock has corrected from rupees 360 to now around 300 rupees. We are looking at a good earnings growth of 10% CAGR in the next 2 years. We are positive on the gas transmission story. We are expecting more profits coming out of the gas marketing business of the company, and we are also expecting the company to benefit if the gas comes under the GST ambit. So these are the couple of positives we are looking at, and at the same time, the correction in the stock price makes the valuations much more attractive at around 9 to 10 times 1 year forward earnings. So we are putting a price target of 440 on the stock.
Okay, that's a buy call on GAIL with the target price of 440. Remember, because of the recent fall this year now, the stock's down almost about 15 to 16%. But the next pick, Sanjeev, is on Voltamp Transformers, a company with a market cap of nearly 1,200 crores. On YTD basis, the stock is up about 10%. But tell us, what's the rationale behind the buy call that you've given? I can also see in your report that you're expecting 13% earnings CAGR for this one over FY19 to 21.
Yeah. So Voltamp is one of our favored picks in the small cap capital goods universe. Now, if you look at the company, I take two major positives from the numbers that the company reported in FY19. The company reported revenue growth of almost 30% in FY19, which was the highest in since 2008. So in a sense that it is a kind of a, I'm looking at it as a precursor of upcoming better times for the industry and for the company. Second thing is the company's order book, which is currently at almost 505 crore, which is again one of the highest in the last 10 years. And the management outlook shared by the company is that the company is getting good order inquiries from various smaller sectors like specialty chemicals, food, beverages, dairy, tires, auto ancillaries, and so the going is expected to be good for the company. We are projecting EPS CAGR of 13%. The management of the company is quite good. They have been able to preserve the quality of the balance sheet despite years of industry distress. And if you look at the balance sheet, the company has around 350 odd crores of cash on the balance sheet as against a market cap of 1200 crore. So that gives us immense amount of comfort in terms of the long-term growth of the company. So considering these factors, as also the valuation, which is at around 11.5 times forward earnings, gives that we believe that the valuation can also go up to 15 times 1 year forward. So these are the couple of factors that we like in Voltamp, and it is one of our preferred picks in the small cap capital goods universe.
Okay, Sanjeev, we'll leave it at that. Thank you so much for joining us this afternoon and taking us through your views on the markets and the several stocks that we have addressed so far. So, well, that's Sanjeev Zarbade, and well, the stocks that he favors at this point in time, and there is a little bit of an opportunity. But what hasn't really been that great, at least over the last few months, is the auto sector. The last 6 months, in fact, have been tough for the auto sector, and the fall in car sales was the sharpest in 20 years during the month of May. While companies like Maruti well, does not see a revival anytime soon, well, we do see something like perhaps, Subros, which expects demand to pick up for the most in August. And two-wheeler, sales have also dropped nearly 7% in May. Let's discuss these trends with another auto component maker, Neeraj Munjal, the managing director of Shivam Autotech, is joining us on the show. Neeraj, good afternoon, and thanks for taking the time out. Neeraj, if I can just, talk about your very own, business. What we've seen is, revenues where they are, but we've also seen a little bit of a problem when it comes to the bottom line. How are you assessing the quarter, perhaps the last 2 quarters gone by, and what's your outlook from here on?
See, the market since after November, there was a decline in the market. Both two-wheeler and four-wheeler declined after November, and we had a troubled time during that time. But now we have recovered back, and now we see the trend of growth coming in this month, and we feel that the market is going to revive in near future. But if you see the market, despite downward trend, Shivam Autotech has registered growth in double digit. So that means that we have diversified into various verticals. We have invested in 2 new plants, state-of-the-art plants in Rohtak and Bangalore, and we are focusing on indigenization of products and catering to our customers' requirement. We have stopped imports of our customers by developing new products into new different verticals. So Shivam Autotech growth has been sustained, and we look forward for further growth during coming months basically because of diversification and adding new customers and new products.
Neeraj, have you added any new customers recently?
We are there is a new export order which has come in, which we are very soon we will go into production. So it is at the approval stage, and very soon we will go into production. But with two-wheelers, especially with Hero, we have been able to add a new product line which is requirement of safety norm into two-wheeler for BS6 norms. We have developed CBS for motorcycle. So this is a great growth we have got from Hero MotoCorp.
Neeraj, you spoke about the export order which is still underway. If you could just tell us roughly or approximately what's the size of that order?
Yeah, we are one of the largest producer of transmission gears in the country, and we have diversified into different fields, into different verticals like components for steerings, and even we have diversified into aviation. So our product range has widened, and especially this export business we have got in for steering products for commercial vehicle. So very soon we are going to export these products.
Right.
Now we are into a very diversified product portfolio.
Fair enough, Neeraj. You know, for all the measures that you have taken now and all the measures that you expect to play out in the next few quarters, the real question is, while you know, there certainly will be growth aided by a lot of these aspects that you've spoken about, there are also concerns with respect to the bottom line. At what point in time do you expect to move back into the green, and you know, what can we expect in terms of profitability in general as we move on towards the next 2 to 3 quarters?
Yeah, we are quite positive, and as the market will come back to its normal position, we will definitely use our capacities to the optimum level, and definitely we will be in profit. The increasing trend is visible, and in future quarters also it will be very visible. So I am quite confident that we can improve our bottom line very soon.
Can we expect the company to become profitable then in FY20?
Hopefully so, because we are expecting double-digit sales growth. So we expect it to be profitable in coming year.
Okay, let's get down to your balance sheet then. Neeraj, I think the debt on the books, it's been on the higher side, which has been weighing on your bottom line. If you could tell us what's the net debt, what's the debt to equity ratio, and what's the repayment schedule that the company is working with in FY20?
Yeah, we have a debt of 250 crores, and everything has been planned accordingly. The investment already has been done, and the production also of new products and new customers have already started. So everything is as per the plan. Once we touch all the capacities to optimum level, the fund flow and the loan repayment won't be an issue.
Okay, and also a word on your current capacity as well as the utilizations at which you are running at, and whether what it could look like towards the end of this financial year.
Yeah, because there is a dip in the market, so we are running at 75% capacity in our two plants, and new plants we are running at 50%. But now moving forward, we feel that these capacities will be utilized in a better way because of market improvement and our diversification. So we feel that the bottom line will improve after the capacities are fully improved in near quarters.
Okay. Just last question, Neeraj. I think majority of your revenues come from Hero MotoCorp. What's the current percentage of revenues that you derive from this client, and will this trend continue going forward?
65% of our sales is from Hero MotoCorp, and we have diversified into different products, and we have started supplying to Maruti, Eicher, and this export business will be added very soon. So HAL also we have started in aviation. So there are different verticals which have gone through and are giving results. So I think this is the ratio we will be maintaining in near future.
Okay, Neeraj, we'll leave it at that. Thank you so much for joining us and taking us through the outlook for Shivam Autotech. We'll be looking forward to some of those developments going forward. But moving on to another management, we have MIRC Electronics, where borrowing did go up six-fold on a year-on-year basis, and there is a slowdown in consumption space. How is MIRC Electronics planning to reduce their debt, and what is the impact of consumption slowdown? To talk about that and more, we are now joined with Vijay Mansukhani, the MD of MIRC Electronics. Vijay, good afternoon, and thank you so much for taking the time out. If you could just tell us a little more about your balance sheet at this point in time, and the positioning that you envisage, and what kind of changes that you see over the course of this financial year.
Actually, thank you for having me over. I mean, first you should name the company actually Onida. We have the brand name Onida, so we just want to talk about that. Okay, let me just tell you, this summer was a bit delayed actually, and we just had a bit of a postponement of purchasing. So the costs of holding inventories went up. So we did have a bit of a problem, and we had a bit of stress in the what you call balance sheet. Also, we had made provisions. We made provisions for whatever, like, because it's the TV business, the picture tube business went out. So we made provisions of whatever little inventories were there. So our balance sheet did take a bit of a hit, but otherwise we are quite positive about this year, and we do hope that the government will just take a few things into perspective, that the economies of scale in China and in India are very, very different. Having said that, we should also see what the Chinese people did, and when they came to India, that they wanted to, they put anti-dumping duty on the Chinese. So the Chinese did something very smart. They went to all the Thailand, In Thailand, you have a free trade agreement. So when you have a free trade agreement, you pay zero custom duty on the finished goods. Now, this is a very big anomaly, which I think we should correct, because if we were to manufacture in India and we were to import raw material, that itself constitutes 10% custom duty. On that 10% custom duty, then you put 28% GST, it comes up to about 41%, because 28 becomes 31 plus 10% custom duty. Now 41% duty is too high on goods compared to in China, where you have 17%, or in Thailand where you have 7%. I hope that the government will reduce this GST, and when the GST does get reduced, I can see the business enhancing itself tremendously. We are totally geared up to manufacture. So I believe that this year should be a good year, in the sense that we will manufacture not only for ourselves, but for non-captive people who come to us to use India as a base for manufacturing. I'm sure Mr. Modi will do something, and this year we are looking very, very positively. That is on the non-captive side. On the captive side, we are very confident. We are going to the rural areas and bunching up this thing with higher purchase. So I see things looking very high, because compared to China, Indian market is about 10%, 12% of China, 12%. And the consumer demand, the demographics is nearly same as China. I can see the demand for consumer electronics being very high. So I'm very, very positive about this year, yeah.
Okay, Vijay, you highlighted the inventory levels that gone up in the last quarter because of delayed summer. Give us a sense how the inventory levels now. Did you cut down prices to push the inventory?
Yes, we did both. We cut the prices. At the same time, we cut the purchases also so that we don't hold inventories. We do want to do a just-in-time inventories. So now we have no inventories of air conditioner. The market did pick up substantially. The markets also picked up substantially for the panels with the World Cup coming in, and so now our inventory levels are coming extremely low. I mean, which is good actually, which is just in time. So this inventory levels coming down, and then we've got a lot of non-core assets with us. Non-core assets that unfortunately the real estate business is not very good. Business is not very good. If the real estate business is good, we'll want to get rid of all our and make ourselves sell all our non-core assets and become a debt-free company. I'm sure that things will turn around, the markets will improve, and we should reduce all our debt, and things will look much better because of the interest costs will come down. Yeah.
Vijay, is it safe to assume that your non-core assets come up to the tune of about 18-19 crores, more than that, considering that's the debt number that I'm looking at right now?
Yeah, our non-core assets are about to the tune of about 60 crores. So our debt is also somewhere around that. It just hovers up and down, depending on the inventory levels. So we are really confident of the fact that we want to bring this debt down so that we can be in a more comfortable position to spend more on advertising.
Okay. Vijay, just one more thing. The current scenario now, the Q4 numbers were not good for a lot of players in this industry because of higher raw material prices, adverse movement in the rupee as well. What's the current situation? Because since then the rupees appreciated a bit. The commodity prices too have come lower. Do we expect any sort of improvement when it comes to the margins in the first quarter of FY20?
Margins will not really dramatically improve in the first quarter because I tell you the sentiment also was very bad and is just turning around after the election. Before the election it was very, very bad. So people were paying a wait and watch. Now things have got even compounded because of the fact that everybody is waiting for a GST rate cut. Everybody waiting for a GST rate cut, and they're saying, okay, if you have to buy something, let's postpone our decision to buy. So anyway, if the government says something, then they should act very fast. But I'm sure they'll cut the GST. And of course, we've made a very strong representation to them to please also reduce the custom duty because it's pointless us paying 10 to 15% on raw material when the finished good itself costs 0% custom duty from places like Thailand and Vietnam and Indonesia, and from Singapore, Sri Lanka, Malaysia, Burma, Cambodia, all these places, all 0% custom duty. So this whole free trade agreement that India has with all these countries needs to have a relook. And to add insult to injury, I think we have some this thing with Korea also, South Korea. Now South Korea is such an advanced this thing. What do we need to give them such concessions in duty also? So we are making a very strong representation. I'm sure. The government is going to listen to us because now that the elections are over, we are very, very hopeful that these things will affect the company very substantially.
Right, fair enough. That is a hope for many of the industries as well, Vijay. But on that note, I'd like to thank you for taking the time out and speaking to us here on Bloomberg Quint, and we wish you the best for the future. But I think we should also take stock of what's going on in the markets, and you know what? 12,000 could just very well be a possibility today, considering we're just about 6 points away from that mark. Currently, the Nifty is at around 11,994 to be precise. And, this is a good time to bring in our technical analysts. So we have Amar Singh of Angel Broking joining us on the show, as does Sacchitanand Uttekar of Tradebulls Security join us too. Good morning to both of you. Good afternoon to both of you. Thanks for taking the time out. Sacchitanand, I'll go with you. How are we playing the markets now?
Well, good afternoon. Well, markets have been very steady. In fact, if you look at the recovery since Friday's session, where we saw a swing somewhere close to around 11,800, and the way markets have rebounded, the overall structure, if you look at it from a broader perspective, we expect that this particular rally should continue right up to say 12,140 odd levels. So if you look at some of the key averages, when we look at the short-term placements, the market has been respecting its 5-day exponential moving average very well. So even yesterday we saw a very good, strong support getting built up around 11,870 mark, where the swing low of yesterday's session was placed. Even in today's session, we saw some declines towards this average, and the way it has recovered from it, I think market is in a clearly good trending zone, and we expect that the supports have now been raised higher to 11,900, and with that stop loss in mind, we continue to hold on to our longs. 12,140 is the review zone for us. So clearly the bias on the market has been positive, and we are optimistic of seeing a further fresh high very soon in the market.
Okay, so the suggestion coming in from Sacchitanand is if you have long positions, you can continue to hold on. Amar, good afternoon. Are you taking any fresh trades on the benchmark indices?
Not at the current levels, but we have been bullish on the index, and the way the index took support around 11,750, 800 levels and bounced back. And technically also on the charts, even the short-term trend remains positive, though we've seen some decline in the bullish momentum. But lower levels are being bought into. Higher levels, I would say, would be resistance of somewhere around 12,050 to 12,100. Those are levels of resistance for Nifty. So that could be a level where we could witness some profit booking.
Okay, well, let's talk about stocks then. And Amar, I'll come back to you on this one. Your stocks that look interesting to you today.
Yeah, I would say the first one is Siemens. If you look at Siemens, technically on the charts, this is one stock which continues to be extremely strong on the long-term charts as well as the short-term charts. And recently it had made a high of 1310 and corrected all the way towards 1229, 1230 and has bounced back from those levels. So technically it's positive on the short-term charts as well. So Siemens is one can look at. So any pullback towards 1261, 1265 can be used as a buying opportunity within that range. And stop loss is 1227 and the target is 1330 on the upside. And the second stock to look at is from the metals pack, and that is Hindalco. What we are seeing in the metals pack is that somewhere or the other there is buying interest coming in the metals, and also the metals on the long-term charts are in oversold territory. That's on the monthly charts, and the intermediate term trend on the weekly charts we are seeing bullish divergence. And on the short-term charts we've seen it break crucial zone of resistance somewhere around 195, 196. So currently it's around 199, 200 levels. So one can buy at the current levels with a stop loss of 192 and a target of 212 in the short term.
Okay, 2 buy calls coming in from Amar Singh. Sacchitanand, you too have 2 buy calls for this afternoon.
Well, yes, we like the overall structure of Berger Paints. Now, if you look at the weekly formation, the stock has been forming a triangular pattern on the weekly scale. Now, this particular pattern has been on our radar, and since August 2018, this particular pattern is in process. We have not seen a decisive close above 335 yet. But if you look at the recent data, the way some of the averages and the oscillators are placed, we are expecting that sooner or later we may see a breakout coming soon. So with that intention, a trading stop loss can be placed at around 327 and some long positions can be considered in Berger Paints futures. We are expecting that once the breakout is in place, there could be an upsurge right up to say 340, 345. So on the bullish side, Berger Paints would be our top pick. The second one that we are liking is Hero MotoCorp. So if you look at the overall structure, the stock saw a breakout from the falling wedge pattern a couple of weeks back. We saw a very smart pullback and a consolidation. So what we are seeing here is that in last 2 trading sessions, there have been some more incremental longs which have been added, and we expect that this particular move can extend right up to 2980. With a stop loss somewhere close to 2720, fresh longs can still be added in Hero MotoCorp futures.
Okay. Well, one stock that I want to address was Yes Bank. It's made a curious move, up 5%. It's been an extremely volatile counter of late. Suddenly you'd find it in the red, and then you never know, it could just turn up in the green. For now, it's advancing by around 5%. So it seems, at least for today, the strength has returned. We really wouldn't want to know but what is in store for Yes Bank, whether or not there is a little more volatility coming through. But let me pose this question to our experts. Amar, how would you trade Yes Bank here on? What levels would you watch out for?
Yeah, looking at Yes Bank, I would say the trend for the stock continues to remain bearish on the medium term as well as the long term. But on the short term trend, what we've seen in the stock is that the stock is displaying bullish divergence on the daily charts, and also the stock was in oversold territory for the last 2 days. And if you look at the lows that was made on 17th May, that was 132.5, and the recent low also of yesterday was 132.5. So that's a very crucial support zone, and from there the stock has bounced back. But on the upside, I would say that somewhere 144, 146 is a crucial zone of resistance where the stock could meet with some selling pressure or profit booking. And only a sustained trade above 146 levels could take the stock towards 155 levels.
Okay, that's the view on Yes Bank. Just wondering, the broader markets, they are still underperforming. If we could just pull up the advanced decline ratio, it's still slightly in favor of the decline. So the underperformance from broader markets continue in today's session. And the quality of stocks which have gone up in today's session are all beaten down counters. So something like PC Jewelers, that's up 12% in trade. Jain Irrigation, which was hitting 52-week low for the last 3 sessions, has recovered a bit. That's up about 10%. And something like Dish TV, that's seen gains of about 9%. And stocks like Infibeam, all of them are beaten down counters. But one stock which has just popped up on my screen is Arvind, which has registered good gains in today's trade. The stock's seen gains of about 4 to 5%. It's also an F&O counter. Let's just get some technical view going on this one. Sacchitanand, on the charts, what do you make of the move that we've seen for Arvind today? Does it warrant for any position on the long side?
Well, clearly the stock has shown very good support somewhere close to 73, 74 mark, and if you look at the weekly scale, clearly there's a very strong positive divergence which has been occurring. So if you look at the overall performance, we are expecting that the stock should see levels close to around 81, 82 in a couple of weeks time, and probably this particular support should held on. So with a stop loss close to 72, I think fresh long positions should be considered in a stock like this. The review zone for the stock is somewhere close to 82, so definitely a very strong candidate which can be added on the long side.
Okay, that's a positive call coming in on Arvind. But moving on, Indian markets have outperformed its emerging market peers so far this year. So how are foreign investors viewing India compared to other emerging markets? Neeraj Shah is in conversation with Jonathan Garner of Morgan Stanley at its annual conference. Neeraj, over to you.
Yeah, thanks for that, Navneet. Yes, with me, special guest Jonathan Garner. Not a new guest to Bloomberg Quinn, but Jonathan, thanks so much. Wonderful conference, the buzz around it, it's pretty fantastic. Is the buzz around India fantastic too? Because I remember a conversation after the exit polls, but before the election verdict, and you were pretty sanguine about the prospects of India then. How is it looking like as you are in India?
Yeah, it's one of our key overweights along with Brazil, and I'm pleased to report that it is performing well along with Brazil. It's a long way from the trade and tariff disputes that occupy China and the US. It's an economy that is relatively closed to trade, particularly on the manufacturing side, where we've got a lot of these sort of question marks over supply chains. We've had the election outcome, and India is also able to benefit from the falling oil price, and that's a bullish environment which has allowed the RBI to begin to cut rates. So India is one of the very few markets in the world that's actually been rising in the course of May and so far this month. Yeah.
Were you surprised with the policy, or did you quite expect the action as well as the commentary, the central bank policy,
well, we
RBI?
talked in our mid-year outlook that actually 2 central banks here in Asia, in India and in Indonesia, would be able to begin a rate cut cycle, and we think there's another 2 rate cuts to come here. But then there is the issue about financial sector transmission mechanism, which I think the incoming finance ministry team needs to address, because we have been going through issues in the shadow banking sector here. And we still have this overarching issue about public sector bank recapitalization, reorientation, that needs to be addressed by the incoming team. And then we can actually really start to get a virtuous growth cycle going again. Because I think the missing part of this story is really the earnings growth for the broader market and the broader economic growth situation, which is yet to improve.
Yeah, and you're banking upon your targets coming through because of the earnings growth. But since you brought this up, and I'll get to the Sensex and the targets in a bit, Jonathan, but since you brought this up, a new finance minister,
yes.
A new team, and as you mentioned, the financial sector, a lot of things need to be done.
Yes.
What have you made of whatever is little has come to the public eye thus far? What do you expect the next 2 months to throw up in terms of reforms, measures, moves?
Well, these problems, I should emphasize, are not unique to India. It's a challenge for many countries, including in the advanced economies, to get their financial sector in the right shape to fund the growth that is needed in all countries. Particularly, it's challenging to engage with the private sector and in smaller scale private sector projects. I think if we look at a sector here in India that is ripe for further activity, it's the real estate sector, both in terms of funding construction and then obviously mortgage financing for creditworthy clients. But we've noticed in terms of the weakness in the economy, things like two-wheeler vehicle sales that have been impacted by the problems in the shadow banking sector. And that shadow banking sector got so big partly because the public sector banks were not in a position to lend. I think the public sector banks, there's a quite obvious macro solution to this, which is to use some of the reserves that India has built up to recapitalize, but also to merge and to change management, to make really clear what is and is not a kind of like, say, a public good aspect of their lending and where they are or are not going to compete with the private banks. Because in aggregate, there has been this persistent problem of growth disappointment. And I think that there's, again, India's not unique in that. There are other countries in the emerging world. Brazil, which we also like for different reasons, has had a quite weak growth environment. In Brazil's case, they're trying to address their key issue, which is the overly large size of the public sector and their public pensions obligations. And again, that they need to get their private capex story going again. But we also need to see that happening here in India. So I'm not the person to give sort of detailed comments on this, but we want to see with a new administration here, a new finance ministry team, we want to see more action on this front.
You would expect, or you would hope for this action to be front-ended immediately around the budget or immediately post the budget, or is it okay for this to happen 3-6 months down the line? Because the reason I'm asking is a lot of people are basing their targets or their predictions on the markets based on what happens in the budget. Too many hopes from the budget, and not all of them may turn out to be true, because the last 5 years this government has shown that they don't necessarily apply to the demands and the wishes of the Lal Street.
Well, I think it's always the case that the government sets the overall environment, but it's the private sector, both consumers and corporates, that can really drive development in any country. And here, obviously, the oil price moving lower and the reduced fiscal subsidy regime, that should pass through relatively quickly. Remember also the trade and tariff issues offer significant potential benefits for India in terms of supply chain relocation, which we're already seeing in sectors like mobile phone handset assembly, textiles. There'll be others where you'll get that relocation. So the budget isn't the only part of it, but what we're interested in seeing in the budget is, yes, there'll be more infrastructure spending, and we'd give the government a good score for that, and hopefully more measures to attract foreign FDI and FII. But this key issue about getting the banking system fixed to fund growth, it hasn't been prosecuted aggressively enough, and it needs to be at the start of this new administration.
So you would want this to be a part of the budget in some form or the other?
Yes.
Okay.
We want to see some really concrete initiatives and action on this.
Okay. Is that a central premise? I'm just trying to get a sense, because you were telling me that you've been swamped with investors seeking your time at this conference, right? Now, what are those 2 or 3 telling things that are the large common issues or questions that investors have, and what has been your response to that as somebody who's advising, a part of Morgan Stanley who's advising them?
Well, this topic that we were just talking about is the one that comes up most frequently.
Okay.
Also, what is the attitude of the government to inward FDI? And the first part of Mr. Modi's administration, it was really quite welcoming to FDI. I think recently there's been more question marks over that, particularly in sectors like the internet space, for example, internet retailing and things of that nature. And then we obviously have to see, how does divestment work? We understand, of course, the government's not in a position to do widespread privatization, but how does it partner with the private sector, both domestically and overseas? That's important. But I don't want to sort of dwell on the negative, because there's a lot to be positive about here. The underlying valuations are relatively low. The fiscal and current account position and inflation position is much better than in the past, so you don't have to worry about those spikes in real interest rates. And India could well get quite lucky at a time when actually the China-US trade tensions are causing some significant question marks over capital flows between the US and China. So that could benefit. India is one of those countries, I think Japan is another, and Brazil is a third, that can somewhat stand in the middle of these two major combatants and actually use the situation to its own advantage.
Would that also be one of the reasons why you are, if I'm not wrong, bullish on the currency as well? I presume you believe the Indian rupee will appreciate over the year?
And local bond yields should go lower, and we think the rupee can get to about 65 to the dollar. Yes. So, and in fact, that's again part of the story of the last 4 to 6 weeks. We've been able to get a rate cut cycle going. We've had the equity market doing well, and the currency has been very stable. In fact, the currency has been appreciating against some of the North Asia currencies that are more caught up in these trade tensions.
And you briefly mentioned flows as well. You guys got that call bang on, Jonathan. I remember conversations from Morgan Stanley team December, January, that India was maybe relatively under-owned, will start now seeing favor. Do you expect that to continue as well? Because there has been a fair degree of inflow that have come in already.
Yes. Again, come back to the point we spent time on earlier in the interview. If that narrative, particularly about financial sector cleanup, financial sector being in a position to support growth, and if investors can really see the earnings growth coming through, the 15-20% that is in consensus and we think is achievable, then you can get a virtuous circle going again here.
Okay, so dependent on that. A couple of quick thoughts. One is on the global level, and therefore one portion that you've spoken about is this trade war and the relative benefit that comes in. Part two is what recently seems to be a more sanguine and dovish and accommodative US central bank. If that stance remains, EMs at large, net beneficiaries, Jonathan?
Yes, a very different environment from last summer when the oil price was high, the Fed was aggressive and shrinking its balance sheet. So again, the external environment is much better. Not all emerging countries can benefit from this change. If you are running very large current account deficit, and if your fiscal position isn't as strong as India's underlying fiscal position is one of the better ones in emerging markets these days. Certainly the reserve coverage of external debt is very strong, for example, which is why you can use reserves to fund public sector bank cleanup and reorientation. Then your currency wouldn't be in a strong position as the rupee. But at the moment, it's very interesting. The rupee and in fact the Brazilian real have been strong in recent weeks.
Well, I'm sure somebody's listening to this because the finance minister has shown that she's pretty open to use all forms of feedback, including Twitter, to get feedback from market participants. So I'm sure somebody's listening to this. One final question, Jonathan. You sounded, and it's played as per script thus far, on your bullishness on the Indian markets as well. Earnings-led upsides in the Sensex. Would you believe FY20 could be that year wherein we finally see some meaningful earnings growth? FY19, there was a little bit here and there. Would FY20 be the year?
Yes, it's been depressed in most sectors for quite some time. There are some exceptions to that, but we should have operational gearing that should kick in after a period of depressed earnings. And our favoured sectors are consumer discretionary, industrials, domestic sectors generally, private sector financial institutions. We would like to see the real estate sector be much larger in the market here, and that's often core to the development process. And again, it's been a missing part of the story here for a number of years. So let's see, there's all to play for now at the start of this second term.
Okay, cross fingers for that. Jonathan, special having you today. Thank you so much for taking the time out.
No, that's all.
And have a great conference.
All right, thank you.
Viewers, thanks for tuning in.
That's Jonathan Garner of Morgan Stanley, overweight on India when it comes to the emerging markets, and also mentioning that he does expect rupee to appreciate and go to those levels of 65 to the dollar. Okay, shifting focus back to the markets right now. Nifty is hovering around those levels of 11,980. We've come off a bit, but not substantially, but definitely, as we've been highlighting, around the 12,000 mark, there is some profit booking which kicks in all the time, and it's happened in today's trade as well. Let's see if we can pick up that momentum in the last last half an hour of trade or no. In terms of individual stock, I want to pull up Cholamandalam Investment. That's the other one which has gone up in trade, and some bit of buying clearly visible here, almost 4% higher in today's trade. Amar Singh at 15.20, would you take a bet on something like Cholamandalam Investment?
Yeah, looking at Cholamandalam Investment, what we are seeing is that the trend for this stock remains positive. It did consolidate after hitting a high of 1555 on 31st May and made a low of 1453. And it has bounced back today significantly. So yes, any pullback in this stock can be used as a buying opportunity. Now the stock has got very crucial support coming at around 1450 levels. And the earlier highs, which was close to 1553, that should act as an immediate level of resistance. So once that is taken out, then the stock can rally significantly higher towards its earlier highs of 1619, which it had made in July 2018.
Okay, that's your view on Cholamandalam Finance. The one other stock that I wanted to address, the one which is also in the news today, is Sterlite Technologies. A lot of strength coming in, and it seems like it will close near day's high, if not at day's high. It's up 10.5%. Well, you never know. In the next half an hour, one may very well see a little bit of profit taking. But it's up and about today. Sacchitanand, what would your view be? Would you initiate fresh longs at this point in time?
Well, if you look at the overall structure, the stock had been escalating lower in the lower top, lower bottom formations, since we saw a top somewhere close to 400, which was in November 2018. Now, if you look at the recent data, we saw a very sharp swing reversal around 143, where a bullish hammer was, placed on the weekly scale. After that, we saw a good consolidation, now a good breakout. So I think, this looks like a change in trend kind of a candidate, and probably, on a very short-term basis, this particular momentum which we are seeing today could extend right up to say 205, 210. So on a closing basis, 180 should be the stop loss for the trade, and longs can still be added. The only thing is that 205, 210 would be the first review zone for the stock. So from a very short-term perspective, some longs can be added here.
Sterlite Tech, remember on year-to-date basis, the stocks are still down about 25 to 30%, currently sitting with gains of about 10 to 11% on back of the news that the promoters have released the entire pledge. Okay, it's time for us to slip into a short break, but hear out Vishnu Mathur of SIAM in conversation with my colleague Nishant Sharma on the slowdown in auto sales.
See, we have been seeing a decline happening in almost all segments of the industry over 6 months now, not just 2 months. And now in the month of May, the data that has come, we are seeing a minus 26% decline in passenger cars, which is the steepest decline since 2001, September. Right. So it's a very large decline that we are seeing. And as we've been talking about the last few months, the kind of slowdown we witnessed last year, since the time of August when the Kerala floods happened, we haven't really seen a revival in the industry. In fact, the industry has continued to go down. Inventory buildup was there, which we are now trying to correct. And this is all a process of the inventory correction, where the industry is reducing production, cutting down on production so that the wholesales to the dealers are less, the inventory pile-up is less, and we are able to manage the entire market and the system. Along with what happened last year, we had a lot of other issues. We had fuel price increase going up to the highest ever that we saw in the country. We had Supreme Court and High Court decisions which led to insurance costs going up for the industry. We had the entire finance, NBFC finance issues, which is still not corrected. And then, of course, we came into the elections and there was uncertainty and the sentiment was down, which is still today down. Mm-hmm. But we hope that as we go along, because now the strong government has come back into the center, they would be in a position to address the NBFC issue, which is a very big issue. The sentiment should come back, and expecting a good to a normal monsoon. Mm-hmm. I think the expectation is that in the second half of the year, we should certainly see some movement as we go along. If you look at the retail sale data which is being published under Vahan, we will also see that the negative numbers which are there in wholesale production, the retail sale numbers are less negative. So there is an inventory correction that is happening very actively. And in the second half of the year, because of BS6 coming in next year, we would expect to see some kind of a pre-buy. So hopefully there will be movement now. And now that the strong government has come back, I'm sure they'll be able to take a lot of decisions which they were not able to take over the last couple of months.
And